Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning, everyone. John Money McKinley here, and thank you all for stopping by for another edition of Real Talk with Real Estate Pros. Got a great show coming up for you today, but I would like to say thank you to everyone who's been subscribing lately to my YouTube channel. I really appreciate that. And as always, I would really appreciate it if I could have you all pass this along to your friends. I'm going to be having more great guests on this show who are really going to start diving deep into what's going on in the world of real estate. And I know if any of you out there have been out looking at homes or looking at refinancing homes with everything going on, it's may leave you at a loss for where everything is at with the market and the interest rates. But we're going to be having a lot of great upcoming episodes where we're going to dive deep into it. And I'm going to announce something at the end of the show about a special invite that's going to be going out where I'm going to have some very private guests on, and it's not going to be on YouTube and it's not going to be on Facebook. It's going to be a private meeting where we're going to have on Ask the Experts, and we're going to dive very deep. But with that said, speaking of Ask the Experts, I have an expert that I have brought on here that is really going to help us today show you how you can really accelerate getting yourself out of debt today. And his name is Rick Collins. Rick, thank you very much for being a guest on my show today. How are you?
Hey, John, nice to be here. I'm doing great. How about you?
I am doing fantastic. Well, I greatly appreciate you being here today. And thank you very much for stopping by. And I would love for you if you could really start giving my audience a little more information about what you do and what you have going on, because I met you not too long ago and I was fascinated by a program you have where you can basically show folks how to eliminate their mortgage in about 10 years. Is that correct?
Yeah, it's really amazing. The math, it's not magic, it's math. But if people can be more strategic with how they spend their money and follow a plan, they can cut their mortgage in half and save all the interest they would pay on the back end of their mortgage and get out of debt completely, and then put that money to work in different and better ways for their future.
Nice. Well, tell us a little bit more. And the company that you have is Geaux Financial. Please tell us a little bit more about who you are and what you have going on with your program, because
Okay, it's Geaux Financial Solutions. It's GEAUX because I am from Louisiana and I am an LSU graduate. So of course my company has some extra vowels and X's in it. I got into the financial services area about 4 years ago. Before that, I was a controller in the oil field. And I was always seeing people getting wiped out by the boom, and they would spend all their money in the boom. And then when the bust came, they get wiped out and they lose all their houses and their trucks and their toys. And I think we saw that in the COVID as well, is if you've got a certain debt load and you're barely making it, and then you lose your job or you don't get any more overtime or another pandemic happens, people were getting wiped out left and right. And depending on that small government check to tide you over just wasn't working for most people. So what I've done is developed a program in conjunction with a company that's been around for 20 years. And we show people how to use their excess cash, not go on a financial diet and eat rice and beans or get a second or third job, but just by using the leftover money they already have. We don't ask people to go on, stop doing their Starbucks or mani-pedis or golf games or whatever makes life worth living, the luxuries that we enjoy. But just that extra 100 or 200 or $300 a month that they wind up blowing anyway, if they can be a little more strategic with how they spend that money, they can attack their debt and get to zero faster than they can do a debt roll down or a debt snowball or any other debt management program, because we use a reactive technology that monitors their actual bank accounts, and they log in once a week and categorize all their expenditures so they know exactly where their money's going. That's step one, is knowing where your money's going. And we take a full inventory of all their income, their debts, the car note, the house note, the credit cards, the college loan they kept around like a pet for 20 years. And this program tells them what to pay, how much to pay, exactly when to pay to get the biggest bang for the buck, instead of shotgunning an extra $20 here or $100 there towards their debts. We're laser focused on the biggest bang for your buck and really cutting the interest you're wasting out of your future.
Well, I'm glad you brought that up, because so many people today, and of course with the inflation escalating continually, a lot of people really don't have a clue on where all of their money is going. And that's great that you're able to really sit down with them and show them that, hey, I'm not asking you to spend any extra money. I'm just showing you a system and a program to where we can use the few extra dollars that you have, throw it at your debt in the correct way so we can eliminate it in a very short period of time. And I get this when I look at a lot of people's debt, when I take a look at it, and they'll say, well, I pay a little bit extra here and I pay a little bit extra there. And I'm just sitting there thinking, going, you're really not benefiting yourself at all. You're throwing a nickel here and a dollar there, and you're not strategically planning things out so you can eliminate that debt. And I would love for you if you could dig into some examples, and I've got a chart if you wanted me to bring it up as well, to where we can dig into some examples of some things that you've done and
Sure.
really give people a better idea.
Yeah, and the biggest thing I do is, once we take that full inventory of the debts and income and where you are, and hey, this is what the bank's plan looks like for you, it's really eye-opening. And one of the benefits that we have is we show them the exact month and year they'll be out of debt. And so sometimes seeing that target really helps people focus on what they're doing. And they may make some changes, but we don't require those lifestyle changes. So if you bring up that summary for Joe Test, is one of actually my clients. I renamed it to protect the innocent. But this guy, well, that's my website, Go Financial Solutions. There it is. This is Joe Test. Joe's an average guy. He's 42 years old. He's got a house note with a $350,000 balance, $25,000 car note, $5,000 on his credit card. You see $380,000 of debt and the associated interest rates, and that's his payment, $3,200 a month. He makes good money, but he clears $200 a month after all of his living expenses, gas and fuel and electric bill, his mortgage, and his debt payments. He's got $200 extra. So 3.5% discretionary income. You would be amazed at what this does. This program will actually take that $200 and apply it to all of his debt. So if you go down the red column, your bank's plan, if he sticks with paying minimum payments on his credit cards and paying his loan payments, he's gonna pay $722,000 over till he gets out of debt. With this program, it's called the Money Max account. You see the column in the middle. He's really only going to pay $562,000. That's all of his balances. You got to pay the principal, and we minimize the interest. It's going to save him $161,000 just by using that $200 more strategically, paying off the right amount and the right debts first. So that effectively cuts his interest rate from, whatever it is, to 2.78%. So if you got a mortgage at 6.5%, 7%, but you can get out of debt in 10 years faster, you're effectively cutting that effective interest rate down tremendously just by avoiding the unnecessary interest. Because I think it was Ben Franklin said, interest avoided is money saved or interest earned, because if you got to pay 18% on a credit card, you've got to earn 18% just to get back to zero. So if you can eliminate that extra interest, you're getting out of debt here 16 and a half years versus 45.9 years. Because really, people never stop using debt. We live in a microwave society, a fast food mentality. And so the credit card's always going to be around. So managing that and getting out from under it so you can pay it off every month instead of letting it build and grow will change your financial trajectory.
Well, a lot
And
of
again, sorry, and again, this doesn't require sacrifice. We want you to live your life, go out to dinner, take trips, enjoy your life because I've been on diets before. I'm good for 2 or 3 months and then I fall off the wagon because I'm tired of depriving myself and I go head first off the wagon. So we're not asking people to make huge changes. It's just using that $200 the right way. And that bills, you pay off one debt, you pay off the credit card first, then it rolls into paying off the car note. And that GPS, if life happens, for example, and you have to buy new tires for the car, you plug this into your financial GPS, it'll recalculate your debt-free date and gives you a new target of, hey, we're going to do this and this expense happens. So now instead of November of 2030, it's December of 2030. You know to the day when you're going to be done. And that helps people stay motivated because you get positive feedback of I'm chipping this way and really making progress.
Well, and then when they get their monthly statements and they start seeing there's larger and larger chunks that are coming out of what they owe, that's another fantastic feeling. Because in this example here that you have, they were spending $3,200 a month out of pocket and bill payment. Well, imagine you get them out of debt in that short period of time. What could somebody do with $3,200 a month that now they have that they could start investing in?
We use a specialized life insurance policy for infinite banking. And what that means is, and the reason we use that is it allows you to grow your money tax-free, risk-free, so you never lose money in the market, even if it crashes during the next pandemic, because one's coming more than likely. And you get to access that money tax-free through policy loans that you can spend on whatever you want to spend your money on. So you're funding a retirement, you're funding your kids' college, you're funding your kids' your next home purchase, for example. Pay cash for a house instead of incurring a mortgage. And no offense to you and the mortgage people, but
hey, you're hurting my business here, sir. I recommend everybody has a home loan.
And so what that does is actually allows you to spend the same dollar more than once. I mean, why would you spend hundreds of thousands of dollars to pay off your house and get out of debt and be at zero? Whereas using the infinite banking chassis behind the scenes here, you're earning 2 to 3% arbitrage profit on every dollar you put through your infinite bank. You pull it out, pay off your house, and you're still earning 2 or 3% on the hundreds of thousands of dollars you've run through your infinite banking policy. And that's really where this comes into pay off your house, fund your kids' college, and fund your retirement all with the same dollars.
Nice. So you really are able to take people, and not only are you showing them a plan for eliminating their debt in a short period of time, but you also have other options for them to look at where they can go, okay, now that I'm starting to have some money to use for investing, you have some other options for them to look at as well too.
Yeah, we call it protecting the money first. A lot of people want to invest in real estate. They want to invest in speculative stuff, ETFs, all that crypto. Park your money first and then in this personal bank. We call it a personal banking policy. Then draw it out and invest in whatever you want. And if you lose all that money, even if you buy something that's not even real, you buy some crypto, it crashes, you're still making 2 or 3% for the rest of your life on the money that you took out to invest. Now, hopefully these investments pay off and you grow your money exponentially, but you've protected the money first and you're always going to have that earning interest for you. So it takes some of the risk off the table, the wobble out of people's finances because they're not gambling with their money like they're at a casino in Vegas on a wild drunken weekend.
Exactly. And I mean, I just did some quick math here, at $3,200 a month savings, that's almost $40,000 a year in their pocket that they
Yep.
could take and use for whatever investing they wanted to do. And I think, especially in today's times, a lot of people, they get caught up and they spend a dollar here, they spend a nickel there, they spend another $20 here on the credit cards, and the next thing they know, almost every check coming in is literally going out to keep paying bills, and you're putting yourself in a position to where it's going to be very difficult the older you get and as you get closer to retirement. Because if we just take a look at this $3,200 a month here, and let's just take that times 10 years, and let's say all you did was just stick it in, that's $384,000 in 10 years.
Yep. People are on a hamster wheel, or imagine being on a treadmill, and you're running as fast as you can to keep up, but the incline keeps going up. That's inflation. So you're running harder to try to keep up with where you are. It makes it almost impossible for people to save for retirement. And if you've got a 401k, great. That you're better than a lot of people, but 25% of your 401k belongs to the government when you take it out. So, and that money's usually in the market. So when you lose 50% and the stock market crashes, it can really impact your retirement, especially if you're retired and no longer earning money and you're depending on that cash in your 401k. You suddenly lose a chunk of it. It hurts. People are going back to work or staying at work longer. And if that's you, great. I want people to have the choices to do what they want to do, not what they have to do because they've made some bad choices along their way and they're not in the financial position they should be in at whatever age they are. The best day to plant a tree was 20 years ago. The next best day is today. And same thing goes for people with their finances. They've gone through a divorce, or they've gone through a business loss, or whatever. They're not where they want to be. So, find out where you are with your debt, eliminate the debt as quickly as possible, and start building that financial cushion for your future.
Oh yeah, and you say that a lot of people have been having to go back to work, and I've run into multiple people in my travels where they've had to pick up a job when they thought they were in their golden years in their retirement, just because they didn't have enough set up and didn't have their self leveraged enough. They were actually over leveraged in debt, and it's sad to see. And I'm glad you're able to come on today and really dive into some of these things, because based on what you're showing me, would you say, if I were to ask you, if 10 people were to reach out to you, Rick, out of 10 people, how many would you say you would be able to help? And I understand that's a very broad question there, but on average, when you look at, and I'm not saying everybody's gonna go through your plan, but if you looked at 10 people's financial situation, out of those 10, how many would you say, yes, I have a plan that I can help you with?
Most people I run into are able to pay their bills. If you can't if you're underwater and can't pay all your bills every month, there's nothing I can do to help you. I'm sorry, but you're going to have to go find more income or cut your lifestyle. I can help with the income part of that, but that's for another conversation. But I can't help people add to their income. But if you've got a couple $100 left over at the end of the month that you waste anyway, I can make a difference. So I would say, of the people of 10, if 7 of them are not underwater, I can help at least 6.
Okay.
So because I do the life insurance thing, and I'm a finance graduate with an MBA. I learned all of this when I started talking to people about financial services and insurance, about how powerful a tool it is. It's a financial pocket knife that allows people to do various things. That it's not just, hey, you get this, your family gets this money when I die. It's more about cementing your lifestyle, securing your retirement funds, keeping your money safe from taxes, and longevity risk. People are living too long. One of the big things most people don't realize is, you get sick or injured and can't work, you're in big trouble these days, because Social Security disability is less than a couple of $1,000s a month usually. It's usually less than that. By having this infinite banking policy, it automatically kicks in long-term care benefits. So if you get sick or injured, can't work, you get a cash infusion of hundreds of thousands of dollars that you can, use to fund your life until you hit Social Security and secure your family, so you don't have to downsize, move out of your house just because you can't work anymore. That's something people don't really think about often enough. But as we're living longer, people are hitting this wall of how do I keep providing for my lifestyle, and there's lots of risks out there that people don't know. And that's why my big thing is educating people. When I first meet somebody, we go through a 45-minute education of, hey, these are the 5 risks that you got to deal with in your financial life. Let me find out where you are so we can come up with a plan to mitigate those risks and get you where you want to be, as painlessly as possible.
Well, let me ask you this. I want to go back here to this document, and I was taking a look at it here. Based on what you showed, with just $200 a month, you eliminated $380,000 of debt in 16 and a half years, correct?
Yes.
Okay. Let me just put this on the table. Let's say that somebody's looking at this and says, you know what? I'm going to go get a part-time job, and I'm just picking a part-time job. I want to get out of debt even faster. And all they made was $200 a month because they got a very minimal part-time job, and all they had was an extra $200. Am I safe to say if they threw $400 in a month on this, they could virtually take this scenario and take it from 16 and a half years down to 8?
I wouldn't go 100. I wouldn't give you 100%, but it's probably somewhere around 9 or 10. It could be 8. It really depends on the mix of their debt and their interest rates. But yeah, if you double what you're throwing at your money, it'll get you out of debt faster. And that's the cool thing about this program is you put your paycheck in every time you get a paycheck. It recalculates what to do with it. So it'll recalculate your debt-free date. If you get a 3% raise, your debt-free date's coming up faster because this program is going to tell you what to do and how to use that extra 3%.
Okay, so every month as you continue to pay down your debt, your program is recalculating everything and specifically telling you, okay, apply this here so we can knock out this debt, and just basically almost starts compounding it and snowballing your debt elimination.
Yeah, it's a managed debt. It's a managed debt snowball, debt avalanche, but it's reactive. It's not set it and forget it, do a spreadsheet once and then focus on that one debt, because life changes, people's debt changes, their income changes month to month. So yeah, this is very reactive. It's just like a GPS in your car or on your phone. You hit a detour, it reroutes you and gets you where you want to go as fast as possible. Hey, there's trouble ahead. Oh, well, I had to replace the tires of my car. What's this do to my plan? It tells you to, even before you spend money. So the really cool thing is if you want to go on a vacation, spend $5,000 on a family vacation, you plug that into the system, it'll tell you what the impact of that will be. So is it really worth it? Do you want to make that choice and delay your debt-free date because you spent $5,000 on a family vacation? Most people would say probably, because I'm going to make memories, but at least it gives you the long-term impact of your temporary decisions today.
Oh, that's nice. So you can actually factor in and go, okay, really need to take the family out on a vacation. Haven't done it in a while. Let's see what spending $4,000, $5,000 on a vacation does to our plan.
Yeah. And you can also set up a budget for that. So the system will have you put money aside for that specific vacation. So it's the impact is minimal that way, because you're being guided to save up money to build that balance, so you can pay cash for your vacation instead of having to put it on a credit card and pay it off over the next 5 years. It just empowers people with knowledge, and it really does act like a GPS. Takes into account everything in your life to get you where you want to be.
Nice. And I like it. And yes, I am in the industry of helping people get financing to purchase homes, but I like what you're doing with your program because I see this on a daily basis. So many people have debt, and it's nice to know that there's a solution out there, a place where people can go to have some options to look at getting themselves out of debt, whether it's paying off their credit cards, whether it's paying off their automobiles, or even their homes. So that way, when they reach the retirement, now they don't have a house payment, which is a very beneficial thing in retirement.
Yeah, if you're not spending $3,200 a month on debt when you hit 65, that Social Security go a lot further.
Well, exactly. Because I mean, Social Security is a lot of us here, at least in my age bracket and the younger, are definitely thinking, I don't know if that's going to be around for much longer, honestly.
Yeah, it's a glorified Ponzi scheme, and they're going to have to keep either changing the goal line and moving your retirement dates out further, or reduce the benefits, or tax, Joe Q public more. It's a zero sum game. We got to fund it somehow. So none of those options are good. So that's one of the reasons we give you that way to build that tax free income, so you can last longer. You can retire earlier, even if they move their retirement date out. You could still live on your savings that you've accumulated in your personal bank and not have to pay taxes, because tax rates are going to go up over the next 20, 30 years, because we can't keep borrowing money and spending money without the bill coming due at some point. And so income taxes are probably going to go up. So using what I do kind of takes that tax monster off the table as well. You're paying the taxes now on the seed instead of the harvest later.
I like that. So basically, you can help them set it up to where when they pull the money out, they're not going to have to deal with paying our good friends at the IRS.
Yeah.
I always say they're our good friends because we all love them and they're such wonderful people.
Yeah, I don't want to wind up on a list either, but I used to work for the government, so I know the government's inefficient, and unfortunately, the IRS is part of that.
Yep. Well, Rick, I really appreciate you being on here today, and I would love it if you could please let people know how they can reach out to you. I've got your webpage here at Geaux Financial, and please let people know how they can reach out to you and they can schedule an appointment to talk with you and see if where they're at in your plan can offer a solution for them.
Yeah, my website is bankingforyourself.com. That has a blurb about me. Down in the middle, that purple box, schedule now. We schedule a discovery call. That's a Calendly link, and we have a Zoom call, because I like being able to see people and talk to people and show people some information in that discovery call. A lot of it's education, and then I'll take an intake sheet, gives you almost like going to a doctor. Hey, this is your assessment of where you are. These are your problems as I see them. How do you want to proceed? And then we come up with a plan to whether or not they want to get out of debt or use the infinite banking, or both. I mean, they're optional. One versus the other works really good by itself, but together they're a real powerhouse. You can also reach me at rick@bankingforyourself.com. And my number is 936-230-1812. That's 936-230-1812.
Well, thank you very much, Rick. It was an honor to have you on the show today. And what I'm going to do is I'm going to put you back in the green room, if you don't mind hanging out for a minute. I'm going to say goodbye to my audience and thank you all very much for being here today. And I want to thank everybody, all of my viewers. Once again, please, I ask you, like, subscribe, and share. And if you know anybody who you think would be a good guest on my show, please send me a text. My number's right up there. Send me a text, and I would love to chat with them and get them on the show. And also, too, I am going to be having coming up next month, shortly after the election, I'm going to have an expert on, and we're going to do a private meeting called Ask the Expert, where we're going to dive in deep, and you can come on, ask your private questions. It's not going to be broadcast live or anything like that. It's all going to be private and confidential, but you'll be able to come in and ask your questions, and we're going to talk about what we foresee happening in the future after the election is over. So with that said, I appreciate it. Y'all have a great day and look forward to seeing everybody here next week for another edition of Real Talk with Real Estate Pros.